morning. It is Wednesday, June 5th. Hump day, humpity hump, 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 hump. But more importantly, I'm going to rant on Morgan Stanley and GameStop and Roaring Kitty. That will be the first thing out of the bat. Second thing out of the bat will be look at Tom Lee. He's saying we're going to the moon, blah, 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 some Apple stuff. We're going to look at UNH. We're going to look at Dollar Tree, the Bitcoin stuff, Tesla, Deere. Then earnings, because we had CrowdStrike, PVH, and HPE, 2 out of the 3. Killed it. Little restaurant stuff. Little flash crash, and then some stuff. There's going to be a little bit, not too much in this one, but let's look at the Qs. First thing off, you might see my screen looks a little bit different. Dan Ushman, the CEO of Trendspider, announced upgraded new volume profile in Trendspider, official announcement coming soon. Don't know what it all means, but it means if you look over here to the right, the volume shelves look a lot different. So you'll be able to see. They've also, with this slider right here, you'll see this blue line. And if you don't see it, I'm sorry, but I'm describing it on your screen. There's a blue line. And what they do is they put the volume area bottom price and volume area top price. It presents to you automatically a level of support and a level of resistance automatically. So if you have trouble reading charts, Trendspider's your friend. They do it. They upgrade this platform constantly without upping your price. And what is the price? Well, you go over here to Linktree, linktr.ee/daily stock pick, and you sign up for Trendspider. It's that top one, $48 a month. They're giving you 6 months for free, $582 a year. That is a steal for that amount of money, for the power that you get. And remember, I don't even use half the stuff that Trendspider actually gives you. It is an unbelievable deal. So now what do we have on the Qs? Well, as I look at this chart, I'm a little bit, I've been looking at charts for years, so I do understand it a little bit more. I'm not an expert in this. Understand, this is just something that I use for guidance. If I were actually trading stuff, I'd look at it a little deeper. But for guidance, we said, hey, we topped out here at about 450, 459, almost 460. And we hit it once. We hit 460 once. We hit 459.74 another time. It's called a double top, but again, these are 4-hour candles, so it holds more weight if it's on a weekly or a longer time frame. But we pulled back. But ironically, at the algorithm, the 4-hour algorithm that you get when you sign up for Trendspider through me, it didn't get you out. It held you in. You lost confirmation, but this didn't get you out. And that's a key, because the longer you spend in the market, the more likely you are to make money. That is a statistical fact. The longer you are in the market, the more likely you are to make money. And so you want an algorithm or something that provides you a look at the charts, because it takes emotion out of your trade. And that's what Trendspider and charting allows you to do. It takes the emotion out. If you've ever sat there and goes, God, I should have bought it down there. Well, that's what this does. See this buy in here at 426? It told you, get in. Did you get in? Well, you had to make some decisions and you had to look at some. But here's the thing. The 4-hour algorithm on this index, it makes you 50% over 24.3 months. 50.8%. What do you get if you just bought and held? 47.6. Now, that's statistically not significant over two years. But if you add that up over a 10-year performance, that's about 10-12% increased. So if you're and I always say this, if you're a person who can't sleep at night because you have too much invested in the market, then make sure you're doing things that allow you to sleep at night. It's not taking your money out of the market. It's making sure that you have an education on the market. So here, QQQ, you're not out. We gained confirmation. You will see when I go to my scans later in this episode, there is a super, super long list of scans. Where do you get those scans? Well, you can sign up, dailystockpick.substack.com. That is the free newsletter. You get a free newsletter like I provided today. There was a millionaire maker stock yesterday. CrowdStrike earnings, NVIDIA versus AMD versus Intel versus Taiwan Semi, and Dell is a buy. And I said Dell was a buy. Dell had a nice bounce. But the Qs, we regained confirmation. If you don't know what confirmation is, Go over here. Right in this education section, that everything that I'm telling you is all there in the education center section. But the Qs, we now have confirmation. We have a long list of ads. Did I make a mistake in selling Amazon? Probably. But, again, I had a $70 average price buy. So, at 176 versus 180, it doesn't make a difference to me. It's statistically insignificant. I have the cash. I can always buy it back. You have to trade with a plan. But these volume profiles provide a very good look that buyers are showing up here. Your support at 450 should be held at this level at 454. So now Tom Lee, the ultimate bull, he says that we're going to, let's see, 5,500 on the S&P, 5,500 on the S&P. Well, what would that be? Well, you just look up like SPY. SPY is one you want because, again, if we're going to 5,500, this one's going to 550. Now, we'll take out all of this stuff. We'll remove this segment. We'll remove this segment. We'll remove this segment. This is an old support line. But your support right here, you can see if we just pull this back to where the algorithm got you in. The algorithm on this one got you out, 2 days ago? Nice 3% gain. But you're seeing the top here. The top here is 532. If you're trying to play SPY, and Tom Lee thinks by the end of the month that we're going to get to 550, if we go above 532, you add to it. It's only 4 points. You're at 530 right now, 2 points. In pre-market, you have 530. So you wait, because if we pass that top level, then we have confirmation to move higher. It's just like here. When you got to this level right here at 523, you didn't want to, and say you pulled out here. You didn't want to add back in during this downtime, this weak time. Now, the algorithm said buy back in. Say you just felt a little bit uneasy and you said, maybe there's more downside. Well, once we passed that 523 level, you had confirmation to add back in because we were going higher. That may be the next leg up. That's how you play these charts. So let's talk about this. Charlie from Zip Trader. I am a big fan of Zip Trader. If you have not signed up for Zip Trader, just their YouTube channel, you should look at his playlist on when to buy and sell stocks. He's actually really, really good in that. He is a little crazy. He's a little bit sensationalist with some of this stuff, but he makes a really good argument, a fantastic argument about GameStop. And it's something that I think a lot of people have been saying, I just haven't been listening to. But remember, Roaring Kitty has an enormous amount of options that will require Morgan Stanley or E-Trade to fill those options on June 20th, I believe it is. You have to look that up, do your own research, understand where you're going, but they have to fill those shares. So if for some reason he decides, I want to buy all these shares, and he gets the $65 million in order to fulfill that, and today, make no mistake, that would make him an enormous amount of money, because GME right now in pre-market is trading at 26.25, and it's down. And you can use the 5-minute algorithm if you want to trade this one. It's an interesting dilemma. I wouldn't suggest that you go into this without a plan. The algorithm has you in at $30.86. You're at $26.50. But remember, he has his call options at $20, and I think it's June 20th. But if he decides to actually buy, which more than likely, based on his history, he has this money somewhere. He has the $65 million. His account shows that he has $32 million in cash to actually buy it, but he probably has the $65 million somewhere, because he's not dumb. He would not put in that call without having the ability to actually do something. He can't sell those calls. This is what I want you to watch. Charlie goes over the 4 options that Keith Gill, who is Roaring Kitty, talks about that he has. And if he's going to sell those options, he's going to crash the price of GameStop. But his memes, his history says he's not going to sell it. So what's the real option? The real option is that he has to buy all those shares. Now, what's the problem with that? Well, Morgan Stanley or E-Trade allowed him to purchase those call options. So, which means that that brokerage house is supposed to have those shares of stocks. Well, what if they don't have those shares of stocks? Yeah, it's not covered. So you sold non-covered calls representing 12 million shares you don't have. So Morgan Stanley and E-Trade allowed this to go through, and they probably don't have the 12 million shares. Well, what do they have to do? They have to buy those 12 million shares. And what's happening? Well, these people on Wall Street Bets, the Roaring Kitty, the retail traders, they ain't selling them. So anybody short, they don't own the stocks either. So it's most likely naked shorts, which again caused the price to go up. I urge you, if you are trading in this, watch Charlie's video. I would urge you to still trade this stock. Don't own it, but I would urge you to trade it. But as we get closer to June 20th, if E-Trade hasn't nullified the trade, if E-Trade hasn't kicked him off the platform, if E-Trade hasn't taken some sort of thing, if you wonder why the SEC in Massachusetts are coming after him so hard, it's because this could break the market. This could be what was happening in January 2021. This could be without Citadel and Robinhood screwing this up. And they screwed it up for retail traders. They didn't screw it up for Roaring Kitty. Roaring Kitty always had an E-Trade account. He's not dumb enough to go to Robinhood. He always had an E-Trade account. And if you want an actual account, go and join Webull. This fourth link right here, you get free stocks. But understand, this is what's happening. This is the meme that's up on the screen. You sold non-covered calls representing 12 million shares you don't have. Morgan Stanley, yeah, that's awesome. This is a scene from The Big Short. Remember this happened. Remember all in The Big Short, all of the big brokerage houses were selling them calls in order to short the real estate market. It blew up the market and we had the real estate crisis. That's what Charlie's going over. You could see insanity coming. You could absolutely see it. Now, Gunjan from the Wall Street Journal, she was on Last Call last night on CNBC. She said it perfectly. He's outsmarted them once. Why can't he outsmart them again? That covers it. For me, mic drop. I mean, that is 100%. He's outsmarted the market before. Understand, Roaring Kitty is a super, super intelligent guy. He's not dumb. He is going into this knowing fully what he's done, and he has held this stock. If I had somewhere near $132 million sitting in the bank, and I was living in my mom's basement, which he was, my ass wouldn't be in the basement. I'd be having 10, 15, 20 million bucks out there. I'd be having a couple of houses. I would be living it up. He has not. He believes in this stock. He believes that the Wall Street traders are still playing games. Why do you think he's tweeting? They're playing games. And again, to Gunjan's quote, he's outsmarted them once. Why can't he do it again? So I want you to look at that. I want you to understand exactly where it's going. Now, the biggest movers of the day, went over it yesterday. CrowdStrike, HPE, they huge. I mean, CrowdStrike is up, 10% in pre-market. HPE is up 15%. We'll go over those a little bit. PVH didn't do as well. Like said, hey, it might bump, but they beat. But their guidance was still kind of crappy. So biggest losers, MNMD, which is a mind medicine, plunged more than 20%. So, that's a one. This, again, Tom Lee is calling for SPY to go to 550 by the end of June. He's been right before, but he's a little bit crazy. I don't know that it goes up there. Jobs report, we're seeing it pump up today. It is what it is. This is Dan Ives. WWDC represents the most important event for Apple in over a decade as the pressure to bring generative AI stack of technology for developers and consumers in front of center with Cook & Company set to make history next Monday. This is Monday. We believe AI adds $30 to $40 to the Apple story. Well, it's an interesting option, but here's a chart from Trendspider. And they posted this yesterday. The resemblance is uncanny. October 2023, and we'll look at this. This is a daily chart. October 2023, 20%. April 2024, 20%. So do you have this pullback? That pullback was fairly big, not, enormous. I mean, you went from about 200 down to about 165. It wasn't enormous. If we go and look at Apple in the 4-hour, we can take a look at it. It's trading at 195 in pre-market. And if we just take a look at that time period, you'll see. I mean, it's pretty damn that's pretty similar. That's pretty similar. And we're heading into, this is July to October. We're heading into June again. So it's pretty similar. I would honestly, I'm looking to try and do a little bit of trimming of this as we get closer to 200, but I'm not selling in front of the event. I do think that the event will be probably muted. The rumors are out there, and it's already priced into the market what they're going to do. And most likely it's going to be significantly delayed. Because remember, the iPhone 16 doesn't come out until September or October. And more than likely, they're going to need additional memory. More than likely, this is going to drive a huge up cycle in the phones. And that's why Dan Ives is saying, hey, $30 to $40 in the stock. He's not saying this particular event has $30 to $40 in the stock. He's saying over the course of the next 6 to 12 months, you got $30 to $40 in the stock. That'd be nice. That'd be nice. But I don't want to sit there and not trim at $200 when it gets there and wait for it to drop back to 167. I got money in the bank now. I sold my Amazon. Do I want to add to Apple? Apple for me, it's probably the safest place in the market. So I like it. I like it a lot. Now, Sherry talked about Dollar Tree. Ironically, it popped. It popped because Dollar Tree explores sale of Family Dollar business report. DLTR is the symbol. Now, DLTR, it went up on that report last night, but it's on its way down again. So this is one I'm not a huge fan of, but the algorithm made you a nice 6%. I want to bring it up. It was big news yesterday, kind of breaking news a little bit after hours. It popped the stock, but again, it kind of has pulled back 1.5%. You got a market that's up and you got Dollar Tree down. It's not great. Let's talk about Bitcoin. When one of the most volatile assets of all time is close to breaking out of a 3-month range, it's worth paying attention. This is Bitcoin. Now, the next one, if you don't want to buy Bitcoin, you don't have a Coinbase account, how are you going to play it? You're going to play it in an ETF. When we look at scans, the scans today are enormous. And the scans, we have a long list. There is a huge list of Bitcoin ETFs that you can choose from. IBIT has become the largest one. Remember Grayscale's GBTC? That one, it used to be the biggest one. Well, we can look at GBTC here. The reason IBIT is one of the biggest ones, we can go and look at these peers on GBTC, because what you want to look at is you want to look at the expense ratio, because that's the price they are paying to, or you're paying to actually do it. Look, 1.5. GBTC is the most expensive. I'm going to take out BITO, Sato. We're going to take that one out. We're going to take that one out. Digital transformation. We're going to take that one out. Let's put in IBIT because I want to compare the two. And IBIT is the biggest one. And if IBIT, if you're looking to get into something, IBIT has a 0.12. That's why it's bigger than GBTC. They refuse to lower their expense. So again, assets under management, 20 billion. IBIT, 20.54 million. And IBIT has a cross up in the 4-hour algorithm. And so if you're trading in this 3-month, if you're waiting for it to break out, we just had the halving. This is one where it's crossing up again. So you had a 36 buy here before the halving. It was May 6th. Boom. Everybody was saying it's going to take off. Well, it took off. It took off. So if you're going to get into a stock, IBIT probably for Bitcoin. And you can do that in your retirement. Remember, you can do it in your retirement. You can do it in whatever. But IBIT, it's a good stock. Good stock to have. Hold on one second. Daisy, stop. You can get under if you want. There is nothing stopping you from getting under. Here's NIO and BYD approved to self-test driving in China. Self-test driving, this is what's going to be big for Tesla. This will be, if they approve Tesla, you'll see a bump in the stock. Now, where's Tesla's stock? Here's the thing, and I heard this from a lawyer the other day who was talking about it. Even though Elon Musk's pay package is up for shareholder vote, if one person brings a lawsuit against him again, they have to go through the whole court process again. And it might go back to Delaware, even though they incorporate in Texas. It might go back to Delaware because that's the ruling judge and that's the jurisdiction. So it might go back to the same judge. You don't know, but they might put it back in the same judge. Right now, the algorithm has you out with a 1.57% loss. What I'd rather have you look at is a long-term stock chart. And we talk about this all the time. Let me see if I can, boom. There we go. I'm going to pull that out there. Okay. 3 times the stock has reached oversold territory. There's 1, there's 2, and it's pumped up. I don't know that this is the time to actually pump it up. There's too much going on with this stock. There was the news report yesterday about NVIDIA chips, Elon taking them over to Twitter and to XAI instead of allowing Tesla to have them. And then he came out and said, oh, that was because Tesla couldn't use them. They would sit in a warehouse. I'm kind of calling BS on that. I mean, if you're telling me that NVIDIA chips are that valuable, maybe if Tesla took inventory and then sold them to XAI, rather than allowing the CEO to do that, that might have been a better option for Tesla shareholders. So there's a lot of conflict here. I just don't like this. And I don't like the stock. I'm not selling it. My parents own a bunch of this. I'm managing their portfolio. I'm not selling it because the MACD just crossed up, and this is one that could pump. And this is the kind of thing when you get this news article, when Tesla gets approval for full self-driving in China, you're going to see that one pop. Now, we had a jobs number from ADP this morning, but what's interesting is Deere cut production jobs and salaried workforce. They're up slightly, but this is a stock that you probably want to look at. The market will move on Friday's jobs report. And we talked about Deere before. Deere it just crossed up yesterday. 367 was the buyer at 369. And you're looking at, it's below the 200-day. The 50 days moving down. What happened the last time the 50-day crossed under? Well, it didn't stay there very long. And the stock continued to move up. You went from 364 on a run all the way to 410. Deere is a good stock that is trading in this range. You want to take a look at this stock down here at 360 to 350 because it's been there since all the way from 2022, and it traded down below that. For the long term, I don't think you're going to be killed by buying this stock. If you're into industrials, if you like Deere, if you like agriculture and farming, if that's your forte, I don't think Deere's a bad buy here, to be honest with you. When you take a look at it, it's ranked 2 out of 10 in the quant. The only reason is the growth. The growth is a little bit stunted. They have tough comps. And what comps means is you're comparing it to last year or last quarter. It's a minus 1.77 year over year growth. The sector median is 5.4. Now, do you expect this one to grow? That's growing their business. That's a tough one for an industrial like Deere. So if you're going to do it, I think you hold it for the long haul. Now, the average price target from Wall Street is $423. That represents a 14% upside. This is pretty heavily covered on Wall Street. 25 analysts in the last 90 days. If we look at the revisions, though, this is the problem. 18 earnings per share down. 9 revenue down. Only 1 analyst had revenue up. Now, when we look at how it trades against its price target, and that's the price target that Wall Street typically puts on it, you can see here it trades under it. And it's well under it. But every time it's well under it, it comes up. So, I'm just looking at an opportunity for you maybe to get into this one. We can look at one thing that I wanted to point out, UNH. This is on a cross-up, and I wanted to point out to you guys, I said it before and I'll say it again. Every time this one gets below $500, you can buy it. The algorithm has a buy-in here at 505. If we look at the weekly, you'll see the scan. Hold on one second. Daisy, there is no way that I need to come over there. Stop. Okay. So here's UNH. It's under $500. It was under $500. We talked about this. Every time it dipped to this 450, it was an opportunity to buy. This time, this last week, it dipped to 473. It didn't dip all the way down. That tells me we're probably going to a higher level on UNH. I just want to point that out. It's in the core portfolio. It's a good stock. If you're into healthcare, it's not a bad one. Now, CrowdStrike increases net new annual recurring revenue 22% year over year. 22%. This one's up 10%. I went over it yesterday. This is not in the core portfolio. This is one that I own. I said I wanted to work my way out of Palo Alto, and work my way into CrowdStrike. It's probably the move. And we're talking about breaking out above. Right now you're at 334. This top line is 344, and the market just opened. You've got this gap. If this gap, I want to reiterate, you want to wait for 3 days after, because look at the reaction to the last earnings. What happened? You constantly just went down. Now, are you happy that you bought at 327 3 days afterwards? Yeah, you're pretty happy because you're at 330. But if you held that entire time, you had time to add to it. And I think the same thing will happen. You will continually get this one to come back in. So I want you to wait 3 days. This is great news. This stock is a great, great buy. If you look at Wall Street on this one, they are saying the price target, I think it's 400 something. Let's see, it's 397. 397. That's a 20% upside from where you are today. The only thing wrong with this is the valuation. That's it. But when you look at the PEG ratio, it's not as bad. It's right on par with the sector. So I don't think that it's expensive. This was a blowout quarter. Expect this one to pull back a little bit today. It's just too much too fast. Now, the other one that we went over yesterday, PVH, they killed it. They killed it. But they reiterated a decrease of 6 to 7% for the rest of the year. That's the problem. PVH, it's up 1.9%. This one was pulling back. Probably a decent trade. If we go and we look at this one, again, they reiterated that they're going to lose 6 to 7% versus their time last year. But they've started covering this gap. It's an interesting one. Again, the buy-in in here, 113, fantastic. The algorithm makes you 63% over 2 years. Your average win is 13%. Let's see where you are right now, where you're trading. You're trading at 7%. So you may have another 7% in this name. It's not a bad one. You know, RSI, a little bit extended at 64, not crazy. MACD, right on the oscillator. So you may want to look at that one. Now, the one that killed it was HPE. Hewlett-Packard Enterprises, it's the AI story. I mean, all they had to do was say AI, and it's probably going forward. This is another one. This is going to push SMCI. This is going to push Dell. This is going to push NVIDIA. This is going to push everything. They said AI is pushing this. They were up 12%. They're up 12% right now. 12%. If you want to read this one, that's a great one. Now, I want you to, if you're into the food stock, fast casual, whatever you want, this is how Chipotle keeps winning. And you can watch this Morning Brew it's a great one. It's on Instagram. And it's on Instagram. And I watched it. I didn't know anything about this. It's Cava and Sweet Greens. You can look at those 3 stock charts. I am not in any of these. But if you're into fast casual food, this is a video that you want to watch. And it's how Chipotle has been able to kill it. Their stock price continues to go up. This is just a great, great video. Another great video that will show you the hubris and the cockiness of Jim Cramer in its heyday is this May 6, 2010 flash crash. And I remember this one. There was, I think, 10 or 15 stocks that absolutely got destroyed, down 40, 50% within a minute. And the 2 ladies on the desk, Erin Burnett and Michelle Caruso-Cabrera, I think they were, those 2 were screaming in Cramer's ear, this is hedge funds. This is hedge funds. And Cramer, to prove it, he was right. He said, if I was at my hedge fund, I'd be putting in orders right now just to buy this. Just buy it. He goes, it's worth it. At $50, maybe you'd question the price of the stock. But at $20, think about it. If you had NVIDIA crash to $500 today, would you buy it? Abso-freaking-lutely. Absolutely. That's what this flash crash was like. But understand, the tools we have today to be able to trade, like Trendspider, like Seeking Alpha, all of these tools that you have to trade, none of that was around. This was me running to my computer in 2010. I was living in, where was I? I was in Florida. I lived in Florida, and I was running to my computer during this time. I had CNBC on. I was working for Earthlink. I saw the crash, and I heard, Jim Cramer say, I'd buy it right here. And I heard these two, cackling women start screaming at each other, it's hedge funds, it's hedge funds. Cramer was just being the douche that he is. And he said, yeah, I'd buy it. He threw out, a bunch of bid stuff. And he was trying to look like the big shot that he thinks he is. So it was interesting. That was a good, and if you want to watch it, it's just great. You can go to YouTube and look at it. It was a fun time to trade. Let me put it to you that way. If I had millions of dollars in those stocks, I would not have had fun. I think I traded one that I made like 20% on within the day. They didn't cancel my trade, unlike the other day with Berkshire Hathaway where they canceled trades. Okay, social request. Charlie from Facebook. What are your thoughts on Synopsys? SNPS. Synopsys. Let's look at the chart first. Look at the technicals. I think I looked at this one. Confirmation bouncing off the 200-day, volume shelves above, MACD below the oscillator crossing up, RSI at 41. I said this one looked good right here, and it honestly was good. Here, algorithm has you out 2.83%. You're seeing some weakness. The MACD's crossing up a little bit. In today's candle, you're kind of on there. You did have this golden cross, which might push you up. If we go and we look at a weekly on this one, we can see it's got strength. It's got strength going up here. But your MACD crossing down, more towards the oscillator. Your RSI is coming. It's in no man's land at 54. Let's go over and look at Seeking Alpha, SNPS. We will go over here, and it's a hold in the quant, and the reason is the valuation and revisions. So if you go to the revisions, the last 90 days, nobody's brought the earnings per share up, 12 down. Nobody's brought the revenue up, 12 down. That's not good for a stock. That doesn't look good. That doesn't look good at all, to be honest with you. Retailers on one side and NVIDIA on the other. Earnings scorecard. You can see Synopsys reported, I guess, on the 23rd or so, 22nd. The valuation, D-. We can go and look at that one. Your PEG ratio is still high. Everything seems to be high on this one. It seems to be a little bit extended. If we go over here to the Wall Street, and we look at the price target, $638. That's 13% upside. To me, with revisions coming down, I don't know that I'd necessarily go into this one. Let's SNPS. Let's see where those, because what I want to see is the date of those price targets. So you can see there's only one this year, and they're saying 665. That was April 4th. Before, most likely, it was a bad earnings because that earnings really took them down from about 590 to 561. Again, average price target 647. Let's see if insiders are selling. In May, kind of big sales. There was one buy from a director, 439,000. But these dudes, the corporate secretary, president, and CEO, they're selling, $4 or $5 million. That's, again, the market cap is $86 billion. So it's a pretty big company. I will tell you, and I think I've said this before, I think software is seeing a bit of a pullback. And I say pullback in that, I've said it before, Charles, there's an 80-90 rule. And a lot of this AI is allowing you to do 80-90. It's allowing you to do 80% of the things that software allows you to do at 90% discount. So that's what I'd be worried about with something like Synopsys. So, Trevor, Gary, I heard you say you don't hold Qualcomm today. Is there a reason for this? I'm up 74% on this one, and now I'm wondering if it's extended. I bought it as a long-term hold. Should I be worried? Qualcomm is in the core portfolio, and this one has had a tremendous run. I owned it for a bit, and I wrote back to Trevor. I owned it for a bit. I think I sold out at about 150. I believe it was back here in January. Maybe it was December where I took some profits on this one. And I just never got back in. And it was my fault. I put the money into AMD. I put the money into NVIDIA. I put the money into Intel. I put the money into Broadcom. I reallocated that money. I'm not sure exactly where I put it, but I reallocated the money and I never got back in. Now, are you extended on this one? I mean, that's the real question. Here, from a 4-hour standpoint, it got you in at 162. You're trading at 209. This 193 is the previous all-time high. That's the previous all-time high. And you can see it from here, January 2022. We've now held 3 weeks above that. That turns into your support. So it was old resistance. It didn't sit resistance for very long. It was this 1 week. You got to 196 was your high. You closed at 193. The week of May 13th, let me reiterate, you closed at 193. That was your resistance. The next week, you opened up at 194. You opened up at 194. You dipped to 193.28, just below this. That meant that this was support. Until you absolutely broke it, it meant that it's support. So for today, I would say that's your support. Are you extended? Absolutely. Do I think you still have room to run? Probably. I mean, as long as chips are in this cycle, and Qualcomm is one of these, as long as the Wall Street target is 195, the valuation is crazy. It's a D. But your peg, you're 14% below. You know, you're not overextended as far as valuation goes. But your growth, that's where you got to worry about it. They have fantastic comps to deal with. It's down 11%, revenue down 11% year over year. Qualcomm, new partnership with Microsoft, full self-driving with Volkswagen. I still think it's a good stock. I mean, would I be trimming up here? I don't, probably not. I mean, you still have strength. But if you want to trim it, again, Trevor, whatever your situation is, whether it's brokerage, whether it's retirement, it's kind of on you. Kudos on the 74%. I would probably be taking some profits. But does it have higher to go? I believe so. Sam Onesta from Spotify wants me to look at Uber. Now, I own Uber, and I doubled up at 62, 63, somewhere in that neighborhood. I doubled up on it because I saw it coming up here. Am I happy that it's trading sideways? No, your support is 61. I mean, honest to God, your support is 61. If you go over here to Seeking Alpha, and again, remember, these are the tools that I'm using. But look at their revenue growth, 14% year over year. That's fantastic, fantastic. The valuation, a little bit extended. You look at the PEG ratio, though, they're 57% below the sector. 57%. It's not ranked number 5 out of 8. What's number 1? I think it's Grab. Didi and Grab are the top two as far as the quant goes. But Uber, to me, is one that I want to hold in my portfolio. I don't want to absolutely get rid of this one. The revisions suck. The revisions absolutely suck. The analysts have been bringing this one down. 3 revisions up, 30 down, 17 up on the revenue, and 22 down. That just means that they have a lower bar to set. And I do believe they will do absolutely spectacular business. You can see we've got some weakness. But again, you go back here to Trendspider. Remember, you got to use your tools. And that 61, I believe, is the support. So 64, are you crazy for buying it? No. But look, we talked about that previous all-time high. That 61 should provide you some support. Now the MACD crossing down, RSI crossing, going down below 50. The last couple of times it's gone below 50. Look at what it did. Now, do I think it's going to come back here to 77 over the next couple of months? No, but you're in the summer travel season. I mean, this is going to be a good stock to hold. For me, I'm holding it, Sam. I'm not getting rid of it. I am in at 40. I think my average purchase price is like 40. So you're going to have to decide if it's worth 64 for you, if you're looking to buy it. In my mind, I just bought it at 62, 63. So that's me. Orlando or Ashley from Spotify. Orlando Lomas fam. I don't know who Orlando Lomas is, but again, Ashley, her name's Ashley. His name is Ashley. Hey, Gary, would love for your take on SEMR. Thanks so much. I don't know what SEMrush Holdings. This is a newer stock, it looks like. No. SEMrush Holdings. SEMrush. Looks like the algorithm got you out with 25%. That's a really good play. You're up 40% over 2 years if you buy and hold. Algorithm doesn't perform very well on this one. It actually only makes you 2%. Your average win is 15%, but you only win 34% of the time. It's because of the losses, and it's probably sustained losses. But take a look at that. It looks a little weak, but it's probably going to get another bounce. And this is on the 4-hour SEMR. Let's go over here, and let's see what they do. SEMrush Holdings. F on valuation. Let's see. Develops online visibility management software as a service platform in the United States, Kingdom. Company enables companies to identify and reach the right audience for their content through the right channels. Again, it's software. I'm not a huge fan of software right now, and it's because of the valuation. If you look at the valuation, look at that PE. That's crazy. They don't give growth numbers. And when you go to growth, it's great, but they've got to continue to grow at 20% year over year. And that's a tough thing to do. So I'd be looking at the valuation. I just don't like software. Right now, I'd stay away from software. The chart doesn't work. For me, Ashley, I'd probably stay away from it. I don't know the business. But again, I don't like software at this certain time. I just don't. I mean, I'd rather be in some hardware stuff. Dex, what are your thoughts on VSCO as an earnings play? VSCO. Let's see. Victoria's Secret. Algorithm makes you 170%. You lose 44%. So I'd listen to the algorithm. Your average win, 27% in this. Over 24 months, you have 20 positions. And right now, you're at 31%. I mean, you've got this gap up to 25 to fill, but, I mean, we can go over to Earnings Hub here, and we can type in VSCO just to look at it. I think it's, let's see. No, it's not on there. VSCO. You got Lululemon, by the way, after the bell today. I'm not bringing it up because I'm not a huge Lulu fan right now. I think you wait for that one. We can see estimate. They're expected to lose 1 cent. They reported $2.58. I mean, I think the business is broken. I mean, if you're going for making $2.58 and you're expected to lose 1 cent, they missed by 10%. Look at the misses. They beat by 4.45%. What'd that do to the stock last time? It dropped it down, probably based on guidance. But they're coming back here. Again, if they make money, you're probably going to cover that gap. You're probably going there back to it. But I'd listen to the algorithm. And again, I point out, on a long-term chart, when you got a stock that's going upper left to lower right, it's not one that I even want to play. That ain't one that I'd say, hey, I found a bottom. Let's go in. So Dex, I'd be a little bit nervous about that one. RZA on Reddit. I'm very new to technical analysis. He posted, and by the way, RZ, you did great on this one. Just so you know, you did great. It's GCT. I'm new. I got into he got into the Memorial Day Trendspider deal, and he's working on adding fundamentals, long-term approach. I'm still mostly looking to add long-term positions using Trendspider to get better entries. When I feel confident enough, I'll mix in a few short-term. That's perfect. That's how I got into Trendspider. Is I wanted to find long-term plays with better entries. I wanted to throw this up to get some feedback and make sure that I'm looking at things correctly. It looks like the MACD is curling up on the RSI, still low enough. Algo has you in, and it tested the 200 SMA. Am I missing anything? No. But what I wrote back was that the only thing that you're missing is looking at a longer term. Because yes, the algorithm has you in. Has you in at 31. You're at 32. The RSI, low. The MACD, low. Volume's trending a little bit down. I did say that there's two lower support levels. There's 25 and there's 18. How did I get to those? Well, we go to the weekly. And that's the only thing that you were missing is that, hey, how does this act on the weekly? Now, we don't have a lot to go on because this just debuted August 2022. And so where are we on the weekly? Well, the MACD is extended coming down. The RSI is in no man's land at 54. Volume levels trending a little bit down. So it's getting a little bit less favorable here. But you can see the bottom level at 11, the top level at 37. In my mind, you continue to go higher. And we bring in Seeking Alpha because we want to take a look at some of the fundamentals. Still a strong buy. They just had a conference call yesterday. I didn't attend it, but I'm sure they're going to, I can watch it again. I'm sure they're going to post it. But it's ranked number 1 out of 5, and it's consumer discretionary. Now, remember these short squeezes, to the short reports. They've all pointed to like weak stuff. I'm in this one, and I'm in with an average purchase price around 38. So the only thing that you're missing, probably RZA, is the weekly. And understand, this is a small cap stock. It's got a $1.28 billion market cap. That's not big. So understand it shouldn't be your main focus in your portfolio. I think you'd be absolutely crazy to have this be more than a 2% portfolio showing. I think you'd be nuts. But you do you, I do me. I think you did great. I think you're doing better than you did. One other suggestion that I had for him or her was just to make sure that as you're getting into technical trading and you're doing this stuff, start paper trading. Webull allows you to paper trade. Savvy Trader, you can paper trade on it. So start taking some positions and track yourself and track the buys and sells on something like the 4-hour algorithm, where you can run it. Again, the 4-hour algorithm in GCT, it makes you 247% over 21 months, 18 positions. So when it gets you in, your average win is 44%. You can see we just had a 204% winner in this with the 4-hour algorithm. It's trading a little sideways, but it seems to be putting in that support at 30. So anything around $30, I would say you're fine buying. That 200-day, it's hugging it. The 50-day still moving negative, but the Bollinger Bands are cinching up. So it's my feedback on it. I think you did great. William, Gary, you like the phrase, I'll say it again, so I'll give you my favorite haiku. I've said it before, and I'll say it again. I've said it before. I like that. And by the way, it was pointed out to me, we've got a garbage truck out here, so we've got activity in the back with the dog. So if I yell at Penny, I'm sorry. Penny, I love you. But it's pointed out to me before that I say listen a lot. Listen. So, okay, some scans. We went over UNH. That's a big one. I want to point out, too, again, one of the reasons why I didn't sell Apple. We have, it's not an entry in the 4-hour algorithm, but when you scan based on the 4-hour algorithm entry, it gives you another bullish tendency. And remember, my algorithm is based on the MACD. So when the MACD starts crossing up again, you get these secondary entries. What this tells me, we may be going for another run. That's why I didn't want to sell Apple. That's why I sold my Amazon, but I didn't sell my Apple. I needed some cash. I sold some Apple. In the core portfolio again, Bank of America. Bank of America has been killing it. The algorithm makes you 37%. 37% over 27 or over 24 months. 27 positions. But Bank of America, 39.62 the entrance. You're trading at 39.80. Again, do you want to win? You win, 41% of the time. So it's worth listening to. But Bank of America is one. Meta in the core portfolio. I've said it before. This one's getting that gap covered. You're going to cover that gap. And it covered it. It covered it today. Covered it all the way up. Remember when I said, hey, this 445? I bought more. Did you buy more? It covered the gap. This is going to get back to its all-time highs. Its all-time highs are right here around 531. 531. I think that's the all-time highs. Let me see. Yeah, 531. That is going to be your next leg up. So Meta got a cross up. VEA, which is a Vanguard ETF. This is emerging markets. This one got a cross up. Royal Caribbean got a cross up. You can see VEA. You can use this algorithm to scan. You can use the scanner to scan for everything. You can use this algorithm on any stock or ETF, even crypto, Bitcoin and stuff. Royal Caribbean, this one's crazy. You make 152%. This is a great stock. This is, again, this is an alpha pick. $129 it got you in here. $129. You're at 155 right now. This is going for another leg up. That's what the algorithm is saying. Royal Caribbean, Coinbase, Unity, GBTC, Procter & Gamble, Merck, J&J, Visa, Electronic Arts, Autodesk, Veridesk, Copart, Mondelez, Regeneron, Cintas, Monster, ROP, all of this stuff is available in the newsletter. So go sign up for the newsletter. It's dailystockpick.substack.com. If you want any of the products, I've got Trendspider, which you go and you sign up. You go to Trendspider, you sign up, then you go back to the link tree and you email me. And I email you back a welcome letter with everything to import. It's not something where it's difficult. It is click and it's imported into your setup. So you can use the 4-hour. Then Seeking Alpha Premium. This is where I get the quant stuff from. This is how you do the fundamentals. The earnings. This is how you say, okay, what's it valued at? And if you don't want to do any of this work and you're just saying, hey, I just want a couple of stocks. Well, this is it. 2 data-driven stocks per month, alpha picks, 122% gain versus the S&P at 35%. It's $449 for the year. And if you don't make that much money, you're not trading with a large enough portfolio to justify it. If I had my choice, I would get Trendspider for $48 a month. That would be my first pick. Because most of the fundamental stuff you can probably research on your own. You can use FinViz. The ads on FinViz drive me absolutely crazy. That's why I think Seeking Alpha Premium is worth it. It's ad-free. I just don't like the ads. It saves me time. Money is the biggest. What you find out when you get rich is that money doesn't buy you things. It buys you time. And you're able to just buy time. That's why I like it. So if you have any questions, hit me up. All of my stuff is there. I will be back tomorrow. We have Lululemon tonight. Again, if you listened this far and it crashed and you're back, I'll give you Lululemon a view of this one. I don't like it. Their product offers are just left. I just don't like this stock. I just can't say, oh my God, they're going to come back. I'd rather see you wait to buy this one and have it down at 250 because the valuation is still bad. If we go over and we look at Lulu here, the valuation is still bad. Bank of Canada just cut rates for the first time in 4 years. But it's still bad. The valuation is still extended. It's still extended. When you look at the revisions on this one, 7 up, 22 down, 3 up, 28 down on the revenue. It's just bad. It's just bad. So if you have any questions, hit me up. Okay,
every morning
bye.
I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.